let's just dive right in. I know you have a busy schedule. I know that there's a lot going on in your life, and I really don't want to take a lot of time, but I really need to address this one other issue. So recently, I had a client who was told by a preparer to send in their husband's death certificate to the IRS. So she followed that direction, and what occurred was, of course, the IRS did not respond. Why didn't they respond? Because the IRS does not respond to mailed in death certificates. They respond to code forms only. So if there is an issue, a code form has to be filed. So I was a little bit disturbed about the fact that someone actually told her to just mail in your death certificate because she received a letter from the IRS about her husband who had recently died. And basically if she would have filed taxes, they would have taken whatever money that she was going to get back and use it for his debt. So that is exactly what happened. Why did that happen? Well, number one, the husband did owe a debt, but number two, it could have been avoided because the IRS has made a form that anyone can file, okay, and not have their money taken because of someone else's debt, or more specifically, because of their spouse's debt. Let's say that because of their spouse's debt, not someone else's debt, because your money can't be taken for someone else's debt, but it can be taken for a spouse's debt. So let's be clear about that. All right, so here we go into this. So, one, I was a little upset about the fact that someone gave her the wrong information. We have enough things going on in life to have someone give us the wrong information. And this was supposed to be a professional person. So I thought that if you're professional, you are up on the law, you know what's going on, you are practicing current law, and that you understand the tax code, so when you give someone tax advice, you know exactly what's going on. But unfortunately, this is the kind of world that we live in, where people are carrying hearsay, and I'm going to break that myth today. So what is the myth I am breaking? You cannot send a death certificate into the IRS if your spouse has died. They do not care about a death certificate. What should you do if your spouse has died and you need to file a joint tax return for you and your spouse, because all along you've been filing separately? I'll tell you what you need to do. Number one, you need to file a joint return with him on your return showing that he has been deceased, okay? Then there's a form called an injured spouse form that will go along with that tax return. Now, I must be honest. A person who handles these types of forms must be versed in tax law, because there are a lot of different steps to this. And if you answer a question wrong, it will hold up your money, and it may, in fact, take your money. But the IRS has made a way for married couples to file a joint return and still get tax benefits. How have they done that? Through this form called the injured spouse form. So, had she filed the injured spouse form with her original tax return, guess what would have happened? Her return would have gone through a lengthy process. It probably would have taken at least another 3 to 6 weeks before the money was released, but that money would not have gone to her deceased husband's debt. So what's the outcome? The file was formed afterwards by my firm, and now she is in a period of waiting. Had it been avoided, had she gotten the right advice the first time, this would not have happened. So, what is my word to you? Please be careful about the advice that you get. Number one, I am giving you solid advice for end your spouse form. Now, listen to this. If you are married and you're filing separate because your spouse owes a debt, guess what? You can use this form, end your spouse form, to file a return together and get your refund back. And whatever money he owes, whatever refund that's on that return, will go towards his debt and you will get your money. So you no longer have to miss credits like tuition credits or child tax credits or earned income credit or any other credit, because when you're married filing separate, guess what? The government is like, you get no credit for that. You get no extra credit to take off of your return. Credits are money, right? Money subtracted. I need to explain that. So, if you are married filing separate, you can use this form. Now, again, I must tell you to use a professional. Have an accountant help you with the form. It seems like income tax preparers, not all, I don't know all, but some of them are not versed in the law. You need someone who is versed in the law. So you can always hit me up. You can always give me a call. You can always, shoot me an email. I am here for you. Me and my firm, we're here for you to help you. And if you don't use my firm, I still say use someone who is professional, who understands the law. Again, thank you for joining me. I look forward to seeing you in the next video. And you already know I'm Amelia Thornton, CEO of First Invest Inc. and Zippy Taxes. I'll see you on the next one, and goodbye.